GM, good morning. Welcome to the Milk Road Show, the daily crypto show navigating Trump fueled market chaos with the same energy you bring to texting sure in the group chat. Zero clarity, max hope. I'm your host, Jay Hamilton. It's Thursday, April the 24th, and we're back with another episode of Milk Road Macro. Now, while the macro environment continues to be quite uncertain and everyone's waiting around for the next Trump tweet, there's a few very important questions we're going to try to answer today to help you as an investor get clarity in how you should be allocating your portfolio right now. First up, what is the end state of tariff policy? Will there be no tariffs? Will there be a little bit of tariffs? Or will we continue with this current setup where we have massive tariffs between China and the US? And how does that impact markets in the long term? Second, there's a growth scare lurking in the background right now. What happens if that spirals into a recession and there's a significant impact on the business cycle? How will that impact markets? How will that impact your portfolio? And third, foreign investors and US investors are reducing their exposure to American equities and bonds right now. What's the long-term impact of this? Is this a short-term thing that is going to change in the future if we get certainty around tariff policy? Or is this a trend that is going to continue, and how will that impact markets and specifically crypto? To break this all down, we are joined today by Ram Ahluwalia, CEO and co-founder of Lumida Wealth. We're also joined by Milk Road co-owner Kyle Reedhead. Now, today's episode was recorded on Tuesday, April 22nd, but everything is still relevant today. Now, since we're launching Milk Road Macro right now, we're also planning on launching a newsletter very, very soon. If you want to be one of the first to get that newsletter when it drops in the next few weeks, hit the link in the show notes and sign up for the wait list. I've also got to let you know that we are doing a very fun campaign right now where you can get 20% off Milk Road Pro. This is our premium product that will help you navigate these markets with the best clarity that we can possibly offer. And because we have so much conviction in our thesis that we are still in a bull market, that we still are going to finish the year much higher than we are right now, if you join Milk Road Pro by May 1st, you will get 20% off for the year. And if you stay subscribed until October 31st and Bitcoin is not at an all-time high, we will refund you. That's right. You heard that right. We will give you a refund. Now, today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Ram, Kyle, welcome to the Milk Road Show.
Thanks for having me. Good to see you, Kyle. Good to see you, Jay.
Great to see you too. Absolute pleasure to have you. Okay, I got to start with what I believe is the most important question right now, which is, what is the end state of tariffs? I know that nobody knows the answer to this question, but that's what we're all trying to figure out right now. If somebody could predict the end state, you'd probably do very well in the markets in the next month.
Absolutely.
When we look at tariffs right now and we consider what the end state is, how are you framing your thinking around this, Ram?
Sure. So there are a couple of alternatives. Okay. Approach one is you have a tariff wall. That means all countries have a tariff at a minimum of 10%. And that's one approach. Call that the Lutnick approach. And then there are additional sector-based or national security tariffs on top of that. And also tariffs that China might be subject to. The second approach is you have a tariff wall, but just around China. That reportedly is what Besant was advocating. That doesn't seem to be going anywhere, unfortunately. I would be supportive of that. That would accomplish a lot of objectives. So that's approach number two. Approach three is you get a bunch of bilateral deals and one-off transactions and negotiations. That seems to be happening now. We did a deal with India. It was announced this morning, or we're very soon to get a deal worked out with India. Israel's got a different kind of deal. So that seems to be the path, the spaghetti solution path. I'm not a fan of this. I love spaghetti, but not spaghetti tariffs. I don't like
that. Okay, so when I want to touch on the second option, that bilateral deal around China. We've been talking about that a bit on the show because that felt like, okay, that makes sense. And it also ties into what Trump has done so far. You can kind of make sense of his approach so far, but you're saying you don't think that's likely to happen?
Unfortunately, no. So that approach would be a continuation of Trump 1.0. Trump 1.0 policy was, hey, we got to be tough on China. China's hacking our intellectual property, manipulating currency and so forth. And this would address a lot of that. The primary geopolitical foe to the United States is China. It's not really Russia. Russia is a small country in terms of economic impact, right? So, but no, it doesn't look like that's the case. Bessent appears to be advocating for that view, but Bessent's going up against Peter Navarro, who's advocating for a very protectionist policy, and Lutnick, who's looking at tariffs as a source of revenue. And it seems like Trump is vacillating based on who's in the room. There was weekend reporting that when Navarro was out for a meeting, that Lutnick and Bessent went to Trump and got the 90-day pause. Think about that. So it comes down to the force of personalities in the room and the axis in the room. And Bessent's a soft-spoken guy. He's a brilliant Treasury Secretary, a very thoughtful individual, knows markets better than anyone else. But he's not as assertive as Lutnick. And Navarro, who really doesn't know what he's talking about. This guy has cited the work of Ron Vara, which is his own pseudonym, in his own writing. He's not a real credible guy. But unfortunately, he plays to Trump's instincts and views the trade deficit as a profit and loss statement, which is the wrong way to look at it. It's a wrong way to look at a trade deficit. It's not a P&L. The American economy expands when the trade deficit grows and it contracts when the trade deficit shrinks. My dry cleaner's importing hangers from Cambodia. He's got tariff impact. His margins are going to contract.
Jeez, just ridiculous, the impacts of this. So let's talk about time for a second, because whichever one of these scenarios ends up playing out with tariffs, in the background, the growth scare is lurking and growing larger and larger every day. And so there's a time question here of how much longer will markets put up with uncertainty. Already we're seeing just ridiculous swings on a regular basis. We were talking about this before we recorded. Trump has said to a lot of the manufacturers in the U.S., just wait, don't pass on the cost to the consumers yet. Just wait. I'm going to deal with tariffs. I'll figure this out. I'll give you some certainty, but they can't hold on for very long. I think he's meeting with Walmart and Costco and a bunch of these manufacturers and these retailers right now. Like, when you look at how much time.
That's exactly right, Jay. That's the most important question to ask. So this tariff news story, the cycle started around February, but in the background, the real issue is, does this growth scare translate into a recession or business cycle risk? And what we've seen is the soft data, sentiment surveys, CEO confidence, CapEx, manufacturer prices paid and received surveys, all that's in the wrong direction. In fact, many of them are in recession territory to the day. But the hard data hasn't deteriorated yet, meaning things like non-farm payrolls, initial claims. So the job market and labor market is still solid. There's a time and opportunity to intervene now to create clarity for businesses, right? Because if you are importing overseas as a retailer, like Abercrombie and Fitch or Walmart or Costco, or you manufacture cars like GM and your parts, materials are coming from Mexico, you don't have clarity. You don't even have clarity on how to move your supply chain. Imagine the story of like Nike. Nike initially had operations in China. Over the last 4 to 5 years, they moved their operations to Vietnam in response to prior policy. So they did right by America policy. And then their tariff rate after liberation, they actually went up before the China rate went even higher. And they've got 500,000 contractors in China across 100 plants doing fine stitch work. And then Howard Lutnick said, look, we're going to bring them back to the United States and get advanced robots to do this. Robots can't even handle eggs. And there's no win. There's no American job win if you're going to have a robot. Robots can't even do it. No one wants that job. Mm-mm. It doesn't help the shareholder for Nike. It doesn't help the consumer going to have to pay a higher price. So, it helps Adidas, helps competitors to Nike internationally. So, but yeah, the timing of intervention is crucial now, because if you don't intervene now and tariffs translate to negative wealth effect in markets, of which we've lost $10-15 trillion in wealth effect, right? And then that translates to business cycle risk. Then fast forward 6 months, you're going to be talking about stimulus package, and deficits will widen and tax revenues will drop and job losses will go up. So that they need to pivot and they need to intervene now. And I expect they will.
When you say pivot, is that Trump pivoting, or do you think the Fed is going to step in, or both?
Great question, Kyle. I would say first Trump pivot. That's the primary driver of the market risk.
Mm-hmm.
Even the Fed is reacting to the tariffs, right? Powell used the word tariffs dozens of times in the last FOMC press conference. He also referenced tariffs multiple times when he was interviewed last Thursday. And he said, look, this is inflationary, and the tariff levels exceeded even their highest expectations on the wrong side, meaning, right? So what you need is a decisive pivot around tariff policy, number one. Two is you need clarity on what the policy is. It's very hard to even articulate. What are tariffs in China right now? Well, if it's semiconductor, it's this, but if it's not, then that. And it's going to change, and national security tariffs are still coming. So people are frozen. You cannot make a planning decision. People's horizons are normally longer term. They negotiate long-term contracts with suppliers. Now it's short-term tactical, and they're frozen. They're building up inventories. They're turning away ships at port because they can't pay the duties. It's a mess, right? The third thing you need is consistency. Right now, you've got three voices. You got Bessent, Lutnick, and Navarro, and they have a different message. The markets like the Bessent message. They don't like Lutnick, and they certainly don't like Navarro.
Let's be honest. Everything in crypto comes with fees. But here's a nice surprise. MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer, network and ecosystem fees apply. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCSUSDL is gaining traction at milkroad.com/Coinshift.
Really what you're saying is you just need clarity, right? Like I assume you're saying, and you tell me what you think, but like tariffs are not necessarily a bad thing, right? If they're done properly and done in a way where you actually know what the tariffs are. And I think, when he pivots, or if he pivots, doesn't necessarily mean it's going to go back to zero tariffs. Like my assumption is some sort of tariffs remain, probably on select goods, obviously much lower prices than, or much lower numbers than they are today. And I don't think there's anything necessarily wrong with that, but I think the businesses just need to know what they are. And then when that clarity comes, the market can kind of like breathe, exhale, and like we can go back to somewhat normal.
You need clarity so you get decision-making done, but you also need good policy. There's such a thing as clarity and bad policy.
Right.
So these tariffs are a consumption tax. They're paid by Americans. They're the American business that imports will attempt to pass along the price to the consumer. That's what we've seen in all the earnings calls. Some will be successful, some will be not. And therefore, the impact is either a reduction in earnings. Earnings drive stock prices. Earnings goes up, stock prices go up. It's really that simple. Or an impact to inflation. And this is very different than Trump 1.0 tariffs, which are just around China. But by the way, I'm all for tariffs on China, by the way. Like the bad actors, they need good behavior. Okay. But in general, though, tariffs will hurt real incomes. They will hurt margins. Tariffs on steel, they make downstream industries that utilize steel, like American Automobile, less competitive. GM had to lay off tens of thousands of workers in Trump trade war 1.0. So I'm not a fan of tariffs. We have rare earth materials in the United States. You can access them with deregulation. It's very hard to build nuclear also in the United States because of regulation. Those are good policies Trump should focus on. He intends to. Canada has rare earth materials too. So yeah, the tariffs are, the business community, like American, CEO roundtable, none of that is really supporting tariffs. They're at this point they're trying to get Trump something so that he can live with, so the business community can advance forward. But overall, though, like I'm not a fan of these tariffs. Tariffing Mexico, it's what that really means is Americans will pay higher prices on products that are produced in Mexico. That's what it really means. Like it hurts Americans. New York sales tax is 8.25%. The tariff equivalent is you're going to pay 18.25%. Now, if you earn $50,000 per year, let's say Trump's appealing to that population, and I was looking at some data from Grok, the AI, yesterday. The average retail spend of that person is $32,000. $32,000. Most of them living paycheck to paycheck. They're going to spend 10% more of that. That means $3,200 more going out of the pocket every year. And they're not even really paying income tax today, after you net out all the transfers and benefits and all the rest. But they're going to get reminded every single day. They go to Walmart, Costco, Dollar General, Amazon Prime. You're going to see merchants starting to put up signs up saying, here's the cost of the tariff component. Like when you go pay gas and they say, pay extra for credit.
Right. What is your base case on how this all unfolds? Like you mentioned the three different scenarios. Do you actually think that, because there's a lot of doomsday people right now that are like, these tariffs are going to do this, like going through the numbers like you are. And it's like, it's obviously really bad if it remains. And I don't know, for me, I guess I'm more optimistic and just kind of believe like probably that doesn't happen and that's not going to remain. But I'm
Sure.
curious, what's your base case on where do you think this actually ends?
I think Trump's political instincts will require a pivot. And what will start that? If he stays the course, it's bad for the economy.
Yeah,
I don't know
everyone.
if earnings goes down and inflation goes up, it's bad for everyone. And the most toxic thing for markets is actually inflation. If you study market history, it's actually inflation. Number two is higher interest rates. By the way, higher interest rates happen because of inflation. That's usually how it works. So the way I see this unfolding is Trump will pivot. He has to pivot. If he doesn't pivot, they will feel losses in the midterms. And funny thing is, you see in the surveys now, like left-leaning liberals now support free trade, which is hilarious.
Yeah.
So that's not how it used to be. AOC supports tariffs. The United Auto Workers Union supports tariffs. It's actually a left policy. So I think he will have to pivot, right? If he doesn't, you're going to get a negative non-farm payrolls report. You're going to get a job loss. So you can see unemployment rate go up, stock market will go down, and then he has to pivot.
So let's, and your assumption from what you said previously was it's probably soon, right? Like you kind of got to do it soon because again, the hard data hasn't been hit yet. The soft data has. So there's like some sort of window here, but we're talking days to like maybe weeks, but I don't even think
It
I want
looks
to say
like
weeks.
it looks like Besson was successful last week in
Right.
advancing this message to Trump, which was around, hey, focus on winning deals, not revenue. Revenue is just only saying taxes, by the way. It's just taxes.
Yeah.
So winning deals. He flew down to meet Trump and he said, change the message on deals. And then the very next morning, he co-drafted a tweet which led to this massive 7% rally. I think it was on August 9th. And then
April
today,
9th.
sorry, thank you. I appreciate it.
April 9th. Yeah.
April 9th, right. And then this morning, we saw that there is an outline of a deal with India. They team up on defense. Maybe American big box stores can access India. And that would be a legitimate win, by the way. That's a legitimate win vis-a-vis India. But the bigger trading partners that matter are Mexico, number one. For sure, Mexico, massive trading partner.
Yeah.
Also Canada. It looks like they'll be out in the cold. Japan and Europe. And my sense is that those finance ministers are holding back. They're not trying to get a deal done. And that was also reported over the weekend. Like
what happened with Japan and Lutnick? Didn't Lutnick go to Japan?
No, Besson did.
So the Japanese finance team, actually, they visited, they showed up, and they said, what's your ask? What are you looking for? And then the Trump team said, what's your offer? And then they say, you guys invited us here, you put these tariffs on, really taxes on yourself. I'm ad-libbing that last part, by the way, but they know. These finance ministers are smart people, right? And then they said, okay, look, I think we're just going to head home. And if you look at like what the leaders in Japan are saying, and also China, they're saying, look, China's saying we want a designated leader to negotiate with that treats us with respect. They're setting terms. They're setting terms of engagement. And Japan also is like, well, we don't know what your ask is. I have a friend who's a money manager in Europe. This is his view. Thought it was a thoughtful view. He said, look, we view this tariff situation as an American-generated issue. You guys chose to tax yourselves. And what role do we have in that? What's our part of this? You can choose to untax yourself if you want. So it's I don't think the finance ministers have a strong interest to get a deal done quickly, because the cost of these tariffs on American small businesses is high. You're going to see small businesses have to shut down. In fact, some that's already happening, right? Ryan, the founder of Flexport, is talking about he deals with a lot of international trade clientele and import-export businesses, and 2 of his clients got acquired by their China suppliers. Right? You're also seeing this creative response from China. So China, like if you want to, you can buy an Hermes luxury handbag for $4,000, or if you're in China, the manufacturer produces a de minimis fraction of that, right? Even after tariffs, you're better off buying from that China supplier, because a 200% markup, 240% markup is less than the Hermes markup. Okay, and they're starting to go direct on TikTok.
Right. So is your pivot Trump making deals, or is it Trump actually just like going right back, actually pivoting and just dropping this whole thing?
He needs a face-saving way out of this. It's not going to be.
He needs a win.
Yeah, it's got to be
where's
deals.
the win for him? He's a winner, right?
He needs a win. Things like the India deal, for example.
Yeah.
Things like, hey, Japan, help us sell American automobiles. The thing is, the Japanese have to want these American automobiles. It's like trade is done by tens of millions of individuals and businesses. It's not like the government orders 4 trucks.
Right.
You can't fit an SUV on a French road. It just doesn't work, right? But there are legitimate opportunities, right? They're like Canada, and they're practicing on the mills. Why don't we have more American banks there? There are non-tariff barriers. There are legitimate issues, but it's not, you can't really reduce it to, hey, there should be no trade deficit. If America wants to remain the global reserve currency, we will always have trade deficits, number one. Number two, if we're the leading economy in the world, then the primary end market for a company like Apple or Netflix will always be the United States. So we'll always have a trade. Apple imports low-cost components from Taiwan and South Korea. They assemble them with Foxconn in Brazil, and they sell it to an American. So of course you're going to have a trade deficit.
Right.
And that model works. It has worked for decades. It has worked because American business has continued to dominate advanced products around the globe, and capital formation has continued to increase. Stock price has gone up. SoftBank's investing in American startups. That comes from the trade deficit, actually. When we buy Toyota from Japan, we're handing them an American dollar. And that American dollar can only be redeemed for 2 things. Either you buy American merchandise, or you buy American stocks and bonds. What's happening is Japan is saying, we want to bet on America. We want to go invest in American entrepreneurs. That's great. That's why the Mag 7 was valuable business in the world. So we are generating that return on capital, which is financed in part by the trade deficit.
Right. So, Jay, I'm not sure if you have any more questions on tariffs. I almost want to transition into, let's say tariffs are over, or we get clarity in the next, let's say, week or two. What does that mean for markets? Do you think we just go on a crazy bull run from here? Is there lingering impacts? I'd say the one, I guess, somewhat good thing is inflation is, as much as people are scared inflation's going higher, it's actually gone way lower because we have this huge growth scare of the last little while. And if that then goes away, then likely we don't have that big impact of inflation going higher, which ultimately could be a good setup for macro. But I'm curious, what's your take on what happens if this goes away in let's say the next couple of weeks?
If this goes away very quickly in one fell swoop, you'd have a snapback rally, could be a significant rally over a few days, maybe a few weeks.
And
Uh,
you're talking American equities?
American equities,
Yeah.
even global, even China, right?
Right. Yeah.
Uh, you know, again, tariffs are many countries involved, so there won't be a singular event where it's like presto, right?
Right.
There'll be a lot of headlines around this, right? Now, what'll happen after that, though, is that these background issues will start to come to the fore, and they'll
Mm.
say, "Oh, wait a minute, growth scare. Is that real or not?"
Right.
And the other issue that's now coming to the fore as well, it's like issue number 3 now, right? Is that foreign investors and American investors are reducing their exposure to American equities and bonds. You see that in the 10-year. We saw the Nasdaq drop 3.5% on Monday, and interest rates increased on the long end of the curve. Like the 10-year interest rates went up. That doesn't happen. It's very extremely rare in market history. And gold has become the safe haven trade,
Mm.
as well as Swiss bonds and Japanese yen bonds. We haven't seen it. Those are now the safety trades.
Right.
That's not good. That's not good for our American interests, right? We want low interest rates, a low cost of capital. And so now you've got a higher interest rate, which is going to mean a higher mortgage rate. That doesn't help the housing sector, which is a key part of the economy also. So there are these knock-on effects.
Mm.
There's an effect on rates, and there's also an effect really on confidence, right? You need to restore confidence. And what that means is enabling foreign investors to have confidence in investing in American bonds, a stable dollar. Dollars drop, like 10%, 15% versus other currencies. So there are other kind of confidence shocks that are hitting the economy because of the ripples from tariff and trade.
Right. And just for the listeners, just to clarify, so like typically what happens when you have a growth scare or equities, people pull out equities, they usually go into bonds, right? And what's happening today for the first time in a very long time is people aren't just leaving American equities, they're also leaving American bonds, which is why the 10-year is going up. And so you have equities going down, you have bonds going down, and you have dollar going down all at the same time. So just like all American assets just going down. But do you think that once this is all done with, um, or like somewhat done with, do you think the confidence comes back, or do you think that's now tarnished for like something more medium long term?
It's a fantastic question. I'd say American capital markets and American business and American management, American entrepreneurship are the best in the world.
Right.
We have the best businesses in the world. And then somehow ASML got stuck in Europe. Other than that, we have
Right.
pretty much the best business in the world. And we have the best end market also. And the United States has 11 aircraft carriers. So that counts too. That means, there's no real threat to the American dollar hegemony. You still have American innovation that works. So my view, and this is a hard call, my view is that you will see confidence come back. I can't say it with high conviction, though. There are very smart people on the other side of this, and really we have to just see how it evolves and how it plays out and what are the policies. Does this become the quarter that we'd all like to forget from a bad dream and wake up? Or is it is tariffs a policy should go into the midterms?
Mm.
We don't want to. No one wants to see that. That's just not going to help.
What's your base case?
I think Europeans and Asian markets, they were they were shocked by not just the tariffs but also like the treatment of Zelensky. And then you have the Munich conference. But I'm not weighing on the merits of this or not. But I think Europeans should pay more for defense. There's nothing wrong with that. Canada should pay more for defense. They should live up to their NATO obligations. There's legitimate points there. Okay, but they are rebalancing. So you think about like we all have that pie chart we get in our statement or the asset allocation. The U.S. was 70%. Now they're saying make it some other number. Whatever where that landing number is, we don't know. But that shift is happening.
Right. Yeah. People always think in black and white. It's like, it's not, US isn't going to zero. Like that, people say that on Twitter. That's the most ridiculous statement ever. It's just maybe there's just a little bit smaller of the share, right, of the pie. Yeah, it's a good way to
We'll
put
see
it.
how it evolves. We'll see how it evolves. I mean,
Yeah.
again, we have the best business in the world and the deepest, most liquid capital markets, and
Yeah.
so it's a dance, and that's a dynamic.
I want to come back to the dollar because the dollar is at the center of a lot of this. It's at the center of the U.S. trade deficit. It's at the center of the U.S. debt deficit. Like the dollar revolves, everything revolves around the dollar here. A weaker dollar obviously helps balance the trade deficit. It's cheaper for Americans to export and more expensive for others to import. So you can have a little bit of a balancing effect. In your view, what's your case with the dollar? Does everything lead to dollar debasement right now? Is that the direction that we're going in?
That's also a very good question. I would say, debasement is a very strong word. I don't see that. The volatility in the dollar we've seen has been significant. You're right. You framed it well. If you're an American exporter, your exports are cheaper now, so you have an advantage. But the inputs into your exports just went up. So what if you're Apple, and if you were subject to the 240% tariff on China or 10% tariff on Taiwan, your dollar went down, but you're offset by this input cost that's higher. It's just a mess. It's just complex. It's not harmonized through the natural forces of markets, right? And if you're an importer, and most of us are importers, well, then in aggregate, you're worse off because your dollar goes less, right? At places we like to shop, like Amazon, Walmart, and Costco, and retail. But where does it go from here? I think there are a few factors. Number one is if Trump replaces Fed Chair Powell, then the dollar will drop. Markets will drop too. Okay. Now a lot of people are telling him, don't do that, including.
Can he do that though? Do you think he can do that? I don't think
No,
that's very clear.
it's not legal to do that. It would be disputed through a court process.
Right.
And that would take many months to play out, and that would add more volatility. So I don't think he'll do that either. He kind of flirted this idea in Q4 2018, by the way. And the market bottomed on the day he said he wouldn't do that. He came close to it. He didn't say he wouldn't, but he came very close and he pulled back from the brink, right? Like what we saw Monday. You saw a rally off that news too, right? Then the rally. So yeah, I think the dollar is complex. It depends on inflation. Like, well, what's the outlook for tariffs, right? What's the outlook for the business cycle? What's the demand for U.S. treasuries? The demand for U.S. equity? So the answer to that depends on how this tariff story evolves. Foreigners have bid up the U.S. dollar, though, over the last 10, 20 years. If you look at, say, the USD JPY currency pair, it's been declining. And when the U.S. dollar strengthens, also been associated with foreign demand for U.S. equities. Right? Foreigners own something like 25% of U.S. stocks. So they are a big part of the demand. There are people in South Korea that love Tesla stock. Tesla's reporting tonight. They love Tesla stock. There are the equivalent of like these closed-end mutual funds in Hong Kong that invest in U.S. American securities, and they trade at a premium to their fair value. So, that creates a demand for the dollar. So it really depends on how tariffs unfolds from here.
Okay, let's come back to the Fed and Powell. Obviously, I think we all agree that Trump cannot fire Powell. I don't even think it would be a good decision, as you just pointed out, if he even tried. That would just create even more uncertainty right now. What do you think? What's the Fed thinking right now?
The Fed is probably in a signal chat saying WTF, sending news headlines. Jerome Powell, I don't know how he sleeps well at night. What's his morning routine? I really want to understand that. Like he must be a stoic or something and listen to Huberman. I don't know. It is my respect for Powell has increased in the last 2 years. He didn't cut rates, which would have helped Kamala Harris last year. He did the 50 bips, but that was kind of a consensus. He didn't cut in May when there's a lot of pressure. He didn't cut in June, right? So, they're sticking to their messaging like an LLM, like a well-formulated LLM that doesn't go off script. You just say he just
those exist.
I know, right? He's not hallucinating. Yeah, he's not hallucinating.
He's not hallucinating. No.
He's saying, "Hey, look, if tariffs happen, costs will go up and we will respond. He's saying inflation expectations are high. He's just trying to read it as best as he can and make as good a call as he can. By the way, he was nominated and reappointed by Trump 1.0, by the way, just to keep that in mind, right? And
we all love to remember that, yeah.
he learned. I mean, he made some mistakes in the first 2 years, I would say, Powell, but he seems to have figured out how this job works. And it's a hard job. It's not an easy job.
Hardest job in the world.
Right. It's difficult.
The thing
So I
that
think
stands
his
out
job
to
is
me,
secure. And look, if he were to leave, by the way, he's still a Fed governor and his term extends. His current term as head of the Federal Open Market Committee is through May of next year. But even after that term expires, suppose he's not renominated, he's still a governor of the Fed and will be part of the FOMC for another 1 or 2 years beyond that. Right? So he's not going to disappear from the scene. And then rates are set via the Federal Open Market Committee through this consensus building process. So even if you replace Powell, it doesn't actually change the rate setting process. Right. So is the juice worth the squeeze if you're Trump? Probably not.
The thing that stands out to me is everybody is sitting here saying, oh, the Fed will save us, the Fed will save us. But if you look at what they're saying we're waiting until we have some certainty, which makes a lot of sense right now. So it really is on Trump to make the first move here, right?
Yes.
I mean, to do something, to pivot, to cause some sort of change here, because thinking that the Fed, even though I know that's what Trump wants, right? He just wants the Fed to lower rates and everybody's happy. But that does not seem like the likely outcome in the short term right now.
I agree. Yeah, we're in Band-Aid mode, right? Yeah, we're in Band-Aid mode. The first Band-Aid was, hey, let's do a special carve-out for Vietnam imports. Second Band-Aid is, let's do a carve-out for semiconductor and cell phones. There's another Band-Aid, which is around, let's give Americans a tax deduction for any payments related to their auto loan. That's another Band-Aid. It's all addressing the bleeding from the tariffs. And the last and most recent Band-Aid is cut rates, Federal Reserve, please. Right? It's a big Band-Aid. It's not addressing the core issues, though, right?
No.
That's the problem. So, yeah, Trump has to move first. As you pointed out, Jay, the Fed, I don't think it's going to do anything in May unless you saw a big miss in the May jobs report. If you saw, say, only 50,000 jobs created or worse, then the Fed would cut. They don't want
inflation lower, and they would need to see inflation lower.
They will respond.
They don't care
if there are job losses happening, because job losses are deflationary.
Right.
This is where it's complicated because the tariffs would raise prices, but then the job losses lower prices. So the price of gas would drop, the price of materials that go into houses would drop, but they're dropping for the wrong reason. They're dropping because people lost their job and they can't afford to pay for that. So, that's why the Fed would cut if there were job losses. Undoubtedly, they would cut and they respond. What might happen is May, no cuts. And if they stay the course, then June and July, you start to see job losses. And then they would do aggressive cutting, 50 or 75 bips back to back.
Jay, can we jump to, I just want to know what you're bullish or you're maybe bearish on right now. Like, how are you positioning in all this?
That was literally the next question. There you go. Cool. Look at you. You're the host of the show.
Are you positioning for a resolution here with tariffs and like that scenario you mentioned where like, okay, everything goes up kind of thing? Are you positioned for that? Or are you just kind of sitting on the sidelines and waiting, kind of like the Fed is? Or are you in, I don't know, gold, if maybe you were early into that? Or like, what's your positioning?
There are two approaches you can take. You can either be nimble or you can be patient. If you're being patient, what does that mean? You own safe assets, cash, bonds, gold. Gold is expensive now. It's tactically overbought. It's complicated now, right? If you're nimble, that's what we're doing, very nimble, we responding to the market condition. What that means is you're trying to make the best decision you can with the information you have. So Monday, for example, around 3 o'clock, there was a washout in equities, and our net exposure was like 15%. And then we brought it up to 50 or 60%. And this morning we saw the India deal, and now we're 100%. We're 100%. And around the afternoon, markets ran up 3.5%. That's a significant trough to peak rally. That's the kind of return you get in a very strong month, much less a day. So we brought our exposure down to 50%. Now, I wouldn't have known that sequence of events Monday morning. Wouldn't have known. It's responding to the condition of the market. We can be nimble like that. That's at least on our active side. But on I think the issue around the growth scare is still a real one, unfortunately, right? And you've got a 19 times forward PE on the stock market that isn't priced for recession or policy risk. And it's like the policy cocktail we have here is like a Molotov cocktail, and it's not going to interact well with valuations. So I think things that are interesting. I did buy MicroStrategy, by the way, earlier this morning, but we'll see. We'll see. I think it has a confirmed breakout. I think it's benefiting from some of the dollar dynamics, but you have to like babysit the position carefully, right?
Well, yeah, with MicroStrategy, definitely. I was going to ask you, like, thoughts on Bitcoin here. Because when I kind of look at the markets, it's like, I feel like anyone investing in equities right now is kind of like back in the 2020, 2021 days where it was like, okay, this economy is opening up. And so, like, oh, okay, we should go into airlines. Or like, this thing's opening up. Oh, let's go into this thing. And it's like, you had to really jump around. I feel like that's what's going on in equities is like, as new news comes out, you're like, oh, these stocks will now do well. And for me, I just think there's not a lot that's not impacted by tariffs. Gold obviously is one of them, which feels like that's probably why like safe haven also not impacted. And then I think the only other thing really that's not impacted by these tariffs is Bitcoin, other than risk appetite, of course, because Bitcoin is a risk asset, but it's also a non-tariff global asset that moves similar to gold in the sense of like liquidity in that. And so I just kind of think like risk reward wise, like it's one of the better ones out there if you're more medium long term. Obviously not like short term. If we have a big scare, some more bad news, like the thing will dump like crazy as well. But I just think in a lot of the scenarios that could play out, Trump pivot, Bitcoin does well. Fed pivot, Bitcoin does well. So I'm just kind of like, I don't know.
Right.
It seems like the
Right.
best option outside of like way better than stocks in my opinion right now. But curious your thoughts.
Yeah, like we own MicroStrategy now. I would
Right.
say, yeah, if Trump pivots and Fed pivot, and Trump has a significant portion of net worth in digital assets and current cryptocurrencies, by the way. That's not a guarantee of a good outcome, but
No.
you are going to get good policy. I think within cryptocurrency, Bitcoin, it has the mind share. It's got more adoption legs behind it. It's going to have more policy support behind it. There's rumors that they might sell gold to buy Bitcoin. I don't know if that happens or not. Who knows? Trump's Overton window is pretty wide. I don't know. Maybe. So, but if there are job losses, then I think it behaves like a risk-off asset,
Yeah.
right?
Yeah.
So my approach is to be nimble, is to be very nimble. And, we're just on top of it. I think categories are interesting now, or like healthcare. Healthcare is a defensive sector. Most of the payment come from entitlement programs like Medicare and Medicaid. I'm all for cutting fraud, waste, and abuse, but it's government revenue, right? Those are good businesses. Those are pretty cheap right now. Well, cheaper relative to other sectors. The overall market is expensive. So it's about this game of finding where the value is. Obviously, the Mag 7 stocks have sold off substantially. They're going to report next week. And this Friday, they can commence their share buyback. So there's a blackout period before earnings, by the way, where you're not permitted to buy back your shares. And market liquidity, therefore, is extremely thin, not just because of that, but other reasons too, like we've been talking about. So there is a bullish setup for these stocks that have dropped like 25%, and they are the best business in the world. I'm not saying go buy all of them, but some of them I think are pretty interesting. So that's an answer to how I'm positioning. But it's finding like when the baby gets thrown out with the bathwater, maybe there's an opportunity. The only sector that's really pricing in recession risk right now is a few days ago, some of the consumer discretionary stocks like airlines. But again, they might rally 15%. They're not cheap anymore because it's a very dynamic market. that the shelf life of any investment perspective is extremely short. And that's because the volatility is very high. I'd want to own a bond at 4.5% interest rate, maybe not at 4%. If something rallies 10%, my instinct is to own less of it. That's more than the average annual return of the stock market in a year. And so volatility is having this like time distortion effect, right? If you get a 3.5% rally from yesterday, 3:30 to 12:30 today, then the markets are no longer as attractive, equities, as compared to other asset classes that compete for that capital. So that's what makes us very dynamic.
Yeah, what I like about what you said is you have two options: be nimble or be patient. And I think the second option is really the best option for a lot of our
Everyone
viewers
should
and
do
our
that.
and it's the hardest thing, right? Like in moments like this, it's when there is so much movement, as you said, you can see it and you want to take advantage of it. And you're like, oh, I missed that. Okay, I'm not going to miss the next one. And then you change your mandate and you change your behavior as an investor. And then
you'll overtrade and screw it up. Like my base case is that we're in a bear market right now. Okay. I'm an optimist, by the way. Like all the rest. I don't make that.
You recently switched to that too, because I feel like I was watching you a few weeks ago, or maybe it was a month ago, I'm not sure. And it was when I think the tariff really came in. You were like, okay, this is it
After
for me.
Liberation
Kind of,
Day,
you sort of switched.
right on Twitter, I said the probability of a bear market has increased substantially.
Right.
It's stock prices follow earnings, and analysts can't forecast earnings. Right? Stock price is really two things. Like, what's that long-term stream of cash flows? Then what's the multiple on that? So on the long-term stream of cash flows, they're bringing that in. They can't really look far into the future because supply chains have to move around. It's business cycle uncertainty. Then on the multiple, there's just more uncertainty due to the confidence shocks. What's going to happen tomorrow when I read the newspaper? So you lower the multiple, the free cash flow streams come in, and then the margins get lower. That means the pressure is on risk assets. If you look at all the elements of the GDP equation, consumer getting softer, capex spend getting lower, government's going from fiscal dominance to fiscal austerity, and trade's getting lower. So that's what I call like the strategic view. At the same time, this market will price in a recession quickly. So you have to be prepared when it does to then go participate and buy. Like if we got to 17 times earnings on the S&P, we're at 19 now, or if the S&P 500 4,500, from where I stand today, I would want to gobble up equities left, right, and center. And it won't feel good at the time. And people will be talking about a recession, and you're going to see negative non-farm prints. That might only be 1, 2, or 3 months away, by the way. We don't know. This is just navigating the fog and laying out different courses of actions based on what happens.
So let me try to summarize your base case is that we're in a bear now. We're in a recession now. The data just isn't showing it yet. By the time we get the data, hopefully we have clarity on tariffs and we could be positioned to come out of this and finish the year stronger.
I don't know that we're in a recession now. You can have a bear market without a recession. Like in 2022, there were no material job losses, but you had a bear market driven by inflation, and that combined with the elevated valuations. So, markets and the multiple in markets, the PE multiple for the overall market, it's all just psychology. It's just psychology. There's nothing, you go to Wharton School or see if they're not like, okay, and here's the multiple. Nope. It's just optimism. It's people's willingness to project out an optimistic future, commit to that, bet on that. And, a few weeks ago, really post-inauguration day, when we had all-time highs, we were projecting Elon Musk putting people on Mars. That's how far we're projecting. And lunar and spaceships and Neuralink and AI, this and that. Now we're talking about Nike shoes and the inflation impact. So it's become tactical and narrow.
Right.
So it's about confidence. And markets have that reflexive property, of course, what Soros talked about, right? These self-reflexive properties. Now, you just had a negative $10, $15 trillion wealth effect. Okay. Now, if Trump pivots decisively with clarity and restores that, you're not going to get much behavior change. You are seeing behavior change now. International travel's down, restaurant is softening, people are accelerating certain purchases, which will create weaker future issues. But what we haven't seen is job losses. That, forget all the technical definitions of recession, the 2-quarter GDP negative. The real marker of a recession is, do you have job losses? And the initial claims data is fine. You're seeing job loss in the government. Even that is slowing down now. So, you can still get a bear market through psychology and confidence shock. Just people feeling less secure about the future. There's a survey that asks people, what do you think about the future of the economy and job losses? And they expect job losses to go up, and they expect inflation to run up. So consumers have already pulled back. CEOs are cutting back on CapEx spending. That's why I think that if Trump does a timely intervention, then risk on. And then we can reassess there and see how big the tariffs are or not, right? But yeah, it's what Trump is thinking and what he says and the policy is the most important variable. It's called headline risk.
I agree. It's sentiment that is in a bear market. It's sentiment that is bringing the prices down. It's not necessarily the data in the background, which is ultimately it can go either way. If all of a sudden the data starts to turn bad, okay, then we're even worse. But it also could flip, and if things change, then things can change quick, and we're back. You know what I mean? So it's we're in an inflection point at the moment.
Very well. You could, if Trump inspires confidence and says, "Hey, we're going to create a free trade zone and isolate China," and everyone's agreeing to drop tariffs at 0%, you'll be at all-time highs.
Right, exactly. We were talking about putting spaceships on Mars, and now we're talking about Nike shoes.
Right.
That's the sentiment change right there. That's so funny.
Yeah, it's all about psychology. That's what it's about.
Yeah.
Ram, thank you so much for joining us today. We're going to wrap up here because we could go on forever, but want to respect your time.
Thank you so much for having me. Really appreciate it.
Appreciate it. Thanks for joining us today. Thanks for listening in, everybody. Have a wicked awesome day. We'll see you again tomorrow. That's a wrap, folks. Thanks so much for listening in. Really appreciate your time as always. Before I let you go, I've got to tell you about a new documentary that just came out. It's called Vitalik, an Ethereum Story, and it is absolutely wonderful. It's available on Apple TV, Amazon Prime, or you can go to the website that's in the show notes if you want to find it, if you can't find it on one of those platforms. It's a high quality it's not award winning yet, but it's made by award winning filmmakers. And it really dives into Vitalik's life, the role he plays on Ethereum, and just the story behind this incredible genius, the billionaire that he is, but the way he lives his life is so different than most billionaires. Fantastic, not only for crypto people, if you're looking for a great documentary for your whole family. I mean, maybe not kids, but for your parents or for your aunt, your uncle, or your brother, your sister, anyone like that, your friends, highly recommend it. It's actually a great way for those outside of crypto to get a little bit of a knowledge and insight into crypto because it's a very approachable, very well-made film. So check it out. You won't be upset. Thanks for listening again. Have yourselves a great day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.